All right, hey there. Good morning, everybody. We made it to Friday. Here in the U.S., that might be saying something with these elections going on here, but it is Friday, the 6th of November, 2020 in San Antonio, Texas. A bit overcast. Not as beautiful as it's been lately. Is that ominous? Is the market going to let us know something? We'll talk about that, but I don't think the weather has a whole lot to do with that. Especially because it's different wherever you are, right? Hopefully, you guys have been having a great week. Doing well, enjoying yourself, and taking some time away when needed. Not trying to get too caught up in all the political stuff going on. At the end of the day, guys, we're all human beings just trying to live our best life, right? So let's give each other a little bit of break, even if we don't believe the same kind of things that the other person believes. So who's here already? Othmane's here. What's going on? Paula Torres, good to see you. LG is here. Sean, hey, man. Aramis, good morning. Or good morning, too. I'll say that. Hey there, Sharon. How are you doing, bud? French Bull, what's up, my friend? Checking in. Chris Day checking in as well. Man, Chris Day's been around with us forever and a day. I'll tell you what. See, that's where we get it from. Forever and Chris Day, see. Anyway, Budman, what's up? Let's see. We have some new news about the deads are coming back to vote. Yeah, I don't know, man. The election stuff is election stuff. Same thing every year. People just become more and more polarized. I wish they wouldn't, but, human beings are human beings. Hey there, Zed. Good to see you, man. Cookie, what's going on? Jordan, good to see you, buddy. Hey, listen, guys, if you have not joined us yet, what are you waiting for? Join us at howtotradetowin.com. We'd love to have you there. As a matter of fact, this morning, we just had our ACB trade shoot off this morning. Over the last couple of days or whatever, we put out the trade setup on the 2nd, so that was 4 days ago. ACB is a cannabis stock. Anyway, it hit our target this morning, 195% profit. If you add that just recently to the MGen trade we had the other day, which was up about 100% profit, I mean, right there, you've got almost 300% in 2 trades. Again, guys, I tell you this because, I sit here and day after day, I preach risk management. And I keep telling you guys that risk management is where you make your money. Not all the other stuff we do on the chart. That's all secondary. Your risk management is where you make your money. And this is me showing you how this is. Because let's say you took 10 other trades in addition to those 2. So you have 12 trades. Let's say those other 10 trades petered out. They all started and then failed, right? So if you did proper risk management, you only lost 1% of your portfolio at a time with each one of those. So it comes out to a little bit less than 10%, right? So you could have had 10 bad trades in a row there. And the next 2 trades, you made 300% total. But it's not even 300%. Remember, if you got those 10 trades, the first trade is 10% of your portfolio. Or I'm sorry, 1% of your portfolio, right? So if your portfolio is 100%, after you lose that trade, you have 99% of your portfolio, right? The next trade is 1% of that 99%. So if you lose it, now you lost, now instead of 99, you're at 98.1. So that's why I said, after 10 trades, almost 10% of your portfolio, right? But here's the thing. So if you lose those 10 trades in a row, you're still up over, you're still over 90% of your profile or your portfolio. And then you get in there and you make that trade where now you made 100% on that. So now your portfolio's up. And then you make that next trade where now you're up 195% on that. Your portfolio's up above that. And it's not that you're up, 100% or whatever. It's you're up 100% of whatever your trade is, right? So what I'm trying to say is you're significantly ahead, even though your strike rate sucks. Your strike rate is 2 of 12, guys. 2 of 12. That's what, 15%? Correct that you had? But yet you're well ahead of where you were. This is what I keep trying to explain to you. Your risk management is where you make your money, guys. If you don't believe it, think about what I just said there and then go pay attention to your risk management. Do it day in and day out. Always be perfecting it. I've been doing this, guys. I've been doing this a long time. Over 25 years. I still work on my risk management. I'm still continually tweaking it to make it even better. A penny here, a penny there, whatever it happens to be. Because the less that you can lose, you're gonna lose money as a trader, period. You're going to lose money. The goal is to lose as little as possible, to let you know that you're in the wrong way on a trade. Remember, that's what your stop loss does. Your stop loss isn't there just to save you money. It's there to let you know that you're going the wrong way in the trade. So if you can get that stop loss set just right, where you're losing just enough money to tell you that you're the wrong way in the trade, there you go. That's what you should be striving to do on a consistent basis. So, yeah, just keep that in mind, guys. Hey there, Win. What's going on? Brian Riley, what's up? He says, I guess there are no pullbacks. Don't give up yet. It's usually that kind of thinking that leads to it. Omar, what's going on, buddy? Good to see you checking in. So anyway, guys, like I said, if you'd love, if you'd like to join us, I really wish you would. We'd absolutely love to have you there. You see a lot of people from our group here right now. Zet's here, Wynn's here, Brian's here, Omar. French Bull. We got a whole bunch of guys that show up here and gals that show up and listen in and chime in. And they really are some of the friendliest people you'll ever meet. They are really great people. They're always there willing to help and give a hand and give their thoughts and whatnot. And by the way, if you're scared that maybe you're a new trader and you're not sure that, you're scared to get out there because, again, new trader, you don't want to look stupid in front of somebody or something, which, by the way, you should never feel that way. But Adam actually started up a new channel that we have. And so if you think you're a new trader and you're with us, talk to him. He'll kind of gauge it and figure out where, if you can. And he kind of makes the decisions about who can join this channel. But this channel is just for new traders, people that consider themselves new. Now, if you've been trading for a year and you've been doing it ineffectively, you could still be considered a new trader. And the goal is to give you a safe space where everybody is at that same beginner level so you don't feel intimidated in asking questions. The last thing we want, guys, when you're with us is to be too scared to ask questions because you're worried about what somebody may think, or somebody might think you're stupid, or it's a silly question or whatever. Guys, you don't know what you don't know. And we are here to help you figure it out. So come on there and join us. Like I said, guys, over 50 setups a week, over 30 hours of educational video content. Tier 3 gets a live stream every week where we, last week we actually took questions, but usually we're giving different techniques and tricks and whatever to trade. As well as real deep explanations about things that are going on. How do you identify things properly and whatnot to make you a better trader. And then of course, if you're tier 2 or tier 3, you get access to all those daily and intraday updates that we do across all the markets. So lots going on there. Jose, what's going on, buddy? He says, been trading 3 years, still feel like an ignorant baby. It happens, guys. By the way, before we get going on here, I just want to make another thing clear, especially if you're a newer trader or somebody that's been doing it a little bit, and maybe you feel that way. The reality of it is, guys, trading is not something you learn to do really well overnight. And I think that's a big deterrent for a lot of new traders, why they don't go to the proper sources to learn how to trade and whatnot, because they come in thinking that they can learn to do it overnight and they can be rich tomorrow, which again leads to why you guys lose so much money when you first start out. It's all in your mindset. That's where most of your problems begin and end as a trader. And yet it's the one thing that very few people out there actually teach you and actually help you work on. But it's one of the main things that we do. But at the end of the day, guys, it's going to take you a while. It's going to take a while. And depending on who you are, it might take you a little bit longer, it might take you a little bit less. But it's going to take you a while to become a consistently profitable trader. It's not happening overnight. But if that bothers you, just think about it this way. What are you going to be doing for the next 5 years anyway? You'd just be working anyway, right? At least if you're learning how to trade, at least you're doing something that after the next 5 years, you can find yourself significantly better off than where you were, with good prospects for the future, rather than just kind of sitting here doing the same thing you're doing, right? And that's the way I like to look at it. Let me see here. Excuse me. LG says, gotta literally pay your dues. Your losses are your tuition. It really is. If we jump over here real quick, guys, this morning I retweeted something from Peter Brandt because it's something you guys have heard me say, often here. Let me see if I can find it. Oh, where is it? How much have I posted this morning? Jeez. Oh, yeah, here he goes. He says, there's only one sure way to learn how to trade speculative markets, and that's to endure enough losing trades while keeping your capital somewhat intact. Traders learn through losses. The worst thing that can happen to a young trader is that he or she starts off with big wins. And I've told you guys that time and time again, because the problem is if you start off right away and you get a win, you think, oh, I know what I'm doing. And then you keep doing that thing and you don't recognize that as a beginner, that was luck. And why is that bad? Because you're going to keep doing that same thing. And then every time you lose when you're doing it, you're going to say, oh no, I just didn't do it right this time. I can do it still. And you're going to keep losing money. You're not going to understand what you're doing wrong and why. So I keep warning you guys about that. That's the worst thing that can happen. Or you can come in with somebody who's giving just signals, where they're not teaching you how to trade. They're just giving you signals, right? And they get a good big win and you start thinking, oh my God, they know what they're doing. Same thing. You keep doing what they're telling you to do, but what if that was just luck? That's why it's so important to actually learn how to trade, guys, to understand markets and do all that. So I agree completely there, LG. Definitely what we talk about a lot. Aramis says, I'm a new trader and I can confirm that you learn a lot from the people in Discord. Oh, I appreciate that, Aramis. Thank you for saying so. Yeah, like I said, guys, we got a ton of people in there. A lot of them have learned from us. Some of them have already had their own experience and their own time in markets doing things. Some of them have actually been professional traders. Others, currently are, or they own their own trading companies. We've got a plethora of people in there. And of course, you see people like Trader XO and Crypto ISO showing up when they get a chance. Of course, Scott Melker's in there. And I just think it's a great kind of balance between, new people and experienced people. And it really helps, traders kind of get a real feel for what goes on in the markets. You get that immersion. And if you're new at first, it's a lot of information. It's really confusing. But that's just like moving to a new city in a country that's a language you're just learning. But you learn it faster and better by being immersed in it than what do you do just on your own out in some deep, dark corner somewhere doing that. So, yeah. Casper says, I think the first step in trading is not thinking you're a new trader. It's knowing you're a new trader and accepting it, then working on it. He says he's been trading for 3 years and still consider himself freshly noob. Yeah, exactly it, guys. Again, I keep telling you, it's all up in your head. The biggest the biggest challenges you're going to face as traders is what's going on in your own head. Whether you believe you can or believe you can't, you are correct. Whether you're a victim or you see that you have control over your life, you are correct. All right? It's all up in your head. So when it comes to trading, you first start out, if you lie to yourself and you try to tell yourself that you're this great trader when you're just starting out and you really have no clue about what's going on, it's going to cause you to lose money because you're going to believe that you know what you're doing, which means you're not going to learn from the mistakes you're making. You're going to say, oh, I just screwed up here or something. But it'll be fine the next time. It's never fine the next time. Good morning, Crypto Girl. Good to see you. Offmate says, I started late in 2017 with wins, and that was all luck. I learned from losses through 2018 and 19. Yeah, Offmate, I bet you're saying things a lot of people are feeling, man. A lot of people came in, they're the Q4 of 2017 when everything was going nuts. And you literally couldn't lose, guys. I'm telling you, those who were with us at the time, man, by the time it got to December, I was putting out like 40 to 50 setups every couple of days, basically. I mean, it was absolutely stupid. That's all I was doing. And it was because everything was going up. It was just helping traders find an entry. You really couldn't do any wrong. It was hard to lose money in Q4. But with a lot of traders coming in, and that's where they started, they thought, oh, that's how it is. Kind of like the Robinhood traders, right? They came in off the bottom, off that March bounce, and they thought, oh, look at how easy this is. Stocks only go up, right? Well, until they don't anymore. What do you do when the market goes sideways? You lose money. So, yeah, Offman, I think you're talking to a lot of people, buddy. Hey there, KRN. Good to see you checking in, man. We're about to get to the markets, buddy. Let's see here. Casper says Q4 was me, except I jumped in 3 days before the drop. 3 days? Oh, man. Jeez. That hurts just reading that. Ballistics, what's going on, man? Good to see you. All right, guys, let's kind of jump in here and see where we're at. There you go. So what did I do? Well, last night, let me put this on 4 here. So last night with the update, I was talking to Discord with our update last night, and I said, listen, we've got a TD9 up here at resistance, the 4-hour R3 pivot, and if we look at the candle here, significant supply coming in. Candle is completely reversed, almost like a reverse hammer here, okay? And I said, well, what we need to see now, that's a good indication we may be at a top, but we need to see some further downside here now. And we haven't gotten there yet. We're going sideways. So that leaves us in a little bit of limbo at the moment, okay? Now, the other things we had there at that time was we have this bearish divergence here, which is a few weeks old. We've got that. Of course, we were topped out up here in Stoke RSI. So, you know, a lot going on there. If we zoom in here to the 1 hour, you know, again, just kind of showing where we were at here on this. Again, you had shorter term bearish divergence right here that we pointed out. And of course, you know, Stoke RSI was up here, not quite at overbought, but it was up there. And then now what do we have? Well, now if we jump over here, you can see that on this down move here, we're printing hidden bullish divergence right now. But if price happens to drop below this wave 4 swing low here, this 14,670, that would invalidate that hidden bullish divergence. Okay. You can see here that OBV continues to drop off, higher or lower highs and lower lows. Price is kind of going sideways here. But what's going on? Well, really, we're looking at these two levels right here. This swing high at 15,812 and this swing low down here at 15,299. Why? Because so far the decline is 1, 2, 3 waves. Potentially corrective. All right? A, B, C, and then we go up higher. So in advance above this, this would be the wave B swing high. In advance above that swing high, that would be your first clue that the bottom may be in. Now, you could have an ABC for an A, and then an ABC for a B, and then 5 more down for a C. So do a flat correction. But overall, that's just prolonging, you know, the sideways until it moves up. You could have ABC, ABC, you know, and you're building a triangle here, basically. But if you're building a triangle here, you know, again, you get this ABC down as A, and this is an ABC up here. This would have to be B right here. So you can't now drop below that swing low or this swing high right here at 15,727 if you're looking for a triangle here. But if this is a triangle here, then obviously, you know, this isn't done here, but this is a wave 4. We've got one more push up. And so again, if we're heading up here higher, you know, our immediate target would be this R4 pivot up here at about 16,415. And then the EQ of this upper supply structure here at 16,640 or so. That's kind of where I'd be looking if we're headed up. But it actually has to get into here. So, I mean, you know, watch this, the bottom side of this upper thing here at $16,055. If you can't get through that, then you're not getting up to those other ones. But again, the thing is, again, it's 1, 2, 3 down. So if it drops down below this one, then you're looking, I mean, minimally at 1, 2, 3, 4, 5. So if you have 5 down, then the best you can hope for if you're bullish is that's A. And then you'll have a triangle or 3 up for B, and then you'll have C, 5 more down for C. A little bit harder for most people to swallow is the fact that maybe this is the top for a while. And so that 5 down will just be a small 1 of A, or 1 of A, you know, with a further downward. We don't know what it is at the moment, though, because we're not there. But some levels you want to watch on the way down is, do we drop below this swing low right here at 15,299? The next one is this swing low right here at 14,670. The next one is this swing high up here at 14,100. Those are the levels you want to watch as you're coming down. If you're going down through those increase the odds that, you know, you're making a much larger correction. And it's not going up anytime soon. I mean, so that's kind of where we're at. Now, what's going to happen today? I think we're probably just going to do a lot of sideways more than anything else. I mean, you know, maybe it'll dip down a little bit lower here for a 5th wave. But I'm kind of getting the thought that this is only, you know, at least going to be 5 waves down here and then 3 up. And part of why I think that way is because if we check out the TPO chart here, this market profile chart, you can see we had this great trending day yesterday, and then today this large initial balance range here suggests that we're just going to kind of hang around this range right here. I wouldn't expect to see any kind of strong move out here with this large initial balance range here. This large light blue line. Let me kind of put the pointer there. This large light blue line here. So I can see us going maybe a little bit lower down or even pushing just a little bit up, but I don't see it making any strong, significant moves prior to the end of the day. And where it closes, where price closes at the end of the day is going to be the most important thing. If price closes above the pink area here, wherever it happens to be at the end of the day, that's your point of control. If it ends above that, that's more bullish. If it ends above the blue area, outside the value area here on top, that's even more bullish, and we might expect to see some trending up in the weekend. But if you're closing below it, like right now, the current price is below this level. Let me kind of zoom in here a bit. Maybe you can see a little bit better. Right here. So right now, the current price is below the TPO POC and just above the volume POC right here. So if it closes below this TPO POC, the weekend starts looking like more sideways or downward, trending downward. If it closes below the blue area, below the blue area is the value range. If it closes below that, that starts giving more confidence in the idea that we're going to trend down through the weekend. If price were to close in this value area here, below this end here, this value area, again, even more likely that price is going to trend down over the weekend. But I think right now, my best guess, just at this moment, at 11:30 a.m. this morning, based on what I'm seeing here at the moment, is that we're probably going to have sideways movement more or less for the rest of the day. And if we're having sideways movement for the rest of the day, that suggests to me that we've got a fifth wave coming here, and then we'll go 3 up. And so by the end of the weekend, by Sunday or whatever, maybe we'll start getting the 5 down for C. Or like I said, it may just be 1, 2, 3, of one of A kind of thing. Or 1, 2, 3 of A. So we'll have to see how it moves overall to see, just how significant this top is. But the other thing that we need to look at here is this. If you're following me on Twitter, I've posted this a couple of times this week. Yesterday was the most recent time, and we were just about to pop up above 2. And here we are above 2. This right here is your inflow means to the spot exchanges. This is an important metric because what this tells you is when it goes above 2, it's a rare thing that it goes above 2. And when it does, it usually indicates that you've got a drop coming in. There's a higher risk, a much, not just a little bit, but a much higher risk of a drop here. Doesn't guarantee it, but many more times than not, when you're getting above 2, you're going to have a drop of some sort. Because what it's saying is the mean inflow of Bitcoins coming into the spot exchanges is increasing above that threshold there. And people send Bitcoin to spot exchanges because they're looking to cash out into fiat. So selling, not just, if you're sending it to derivatives exchanges, then you're usually using the Bitcoin to trade. But if you're sending it to spot exchanges, you're usually looking to get to cash out. And so that's why it's been such an important thing to watch. So twice this week, I mentioned this. One, I think, was probably closer to the third here, I think is when it was. Yeah, we were about 1.8 or so. And I said, it's not there yet, but I said, just watch it. Be sure you're careful with it. And then yesterday I posted again, and we were up here around the 2.0, just hitting it. And then this morning we're definitely above it there. We're pulling back a bit right now, but especially if that continues up there, we might see this kind of really drop off, sometime this weekend or something. So just be sure you guys are watching that, paying attention to what's going on, where that money's going, where Bitcoin is going this weekend as it does it. Let me see here. Let me catch up with you guys here. Casper saying, talking about the Q4 was them, except it jumped in 3 days before the drop. Recovered well after that, all thanks to TWC and the initial training. Well, man, I appreciate you saying that, bud. Thank you so much. I'm glad. Again, guys, the reality of it is I know people in general aren't going to stick with us forever. My goal is to get you as ready to trade successfully as possible before you decide to leave. Now, those of you that are there know that most of the people tend to stay with us for 6 months, a year, 2 years, 3 years. We got people still with us from when we started. And they stay there for a reason. And, we always hope you'll stay because I think that helps. I think that's what makes our community so wonderful, is that people have been there for so long. And they've been there so long because, they find value in what's going on and they find value in their fellow traders, and they enjoy the camaraderie and in the great back and forth of ideas and whatnot. Yeah. I mean, it's really great. We work really hard with it. I hope it shows. Because we love, we love everybody we've got in there. Such a great group of people. Let me see here. Zet says having a little bit of discretion while when a market is trending versus ranging is often key, I found. Amber Lee, what's going on? Says I jumped in on BSV before the drop, but it's all coming back. Your charts are scary accurate. I am learning. You don't charge enough. I appreciate you. Sometimes we're going to get them wrong. And sometimes, as traders, we get on streaks where we're kind of just having a little tough time, especially if the market's acting up. But the goal always when I'm posting setups or when I'm posting updates or whatever, or when I'm discussing things is always, whether it's for Discord or even here with you guys, maybe that aren't with us at Discord, it's the idea that, okay, well, here are my thoughts and here's why. But the bigger idea is that you listen to what I'm saying and how I'm analyzing it and why these things mean these things. And then that way you can start applying that yourself. Because you can have the exact same kind of training I have and see the market differently. But the goal is just to understand what these things mean. Now, the way you interpret them, as a group, that's all in you. But, when we look at things, when we look at swing highs and swing lows and how price reacts around them, when we look at things like the supply structures, the demand structures, or the divergences, and all these things and the way they interact with each other, that's, each one of those things is correct on its own. But you have to take it in context of the bigger picture. And so wherever you're looking at the bigger picture or wherever you're looking at total, it could give you a different outlook. And that's perfectly fine because at the end of the day, guys, gals, guess what? You're the one trading your money, not me. So you have to absolutely understand that so that you can make an effort to really, really understand and really learn. Because again, like I said, guys, whether you believe you're a victim or you believe you're in control of your life, you're right. But I'll tell you this right now, if you believe you're a victim in life in general, you're not going to be able to trade successfully for any length of time. Because in order to trade successfully, you have to speculate, which means you have to make decisions based on incomplete knowledge, incomplete information. And the only way you can do that is by believing, and the only way you can do that and trade that is by believing that you could be correct. And you can't believe you're going to be correct if you're a victim, guys. I promise you this, in the world, you're not a victim. You might believe you are, and that'll, again, you'll convince yourself that you are. That's not going to help you out in life. It's definitely not going to help you in the charts. You have complete and utter, responsibility for your actions. If you want to do something, do it. A lot of people don't really go further in their lives, where they could, because they're scared. Believe it or not, some people are scared of being successful. They don't know what that means or how to act with that. Other people are scared of losing, scared of being wrong, scared of what other people will think. Stop being scared. You have to do. But the one way you can help yourself with that, whether it's on the charts or in life, is risk management. Absolutely, guys. I'm telling you right now. And you know what? The best thing about that is, if you take on the understanding that you control what goes on with your life and that you are not a victim, then even when you lose, you're going to be much better off as a person, as yourself, than if you just lived life as a victim. There is a certain sense of ownership and self-control and self-worth when you finally figure out that you control your life and what's going on with it. So if you don't believe that way yet, work on it. I'm telling you, it'll be the best thing you could ever do for yourself. Trading or otherwise. It really will be. Because all of a sudden, you'll start seeing opportunities. They'll present themselves, and you'll start finding the courage to take a chance. And yet, you'll also have the right state of mind that you pay attention to what the risks are associated with it, and you try to, remove as much of that risk as possible for yourself in that. Let's see here. Let's see here. Hey there, brought to you by Wendy. It took me a minute to read that. What do you think of this wave count on the weekly Bitstamp chart? Wave 1 starts at 91.75, goes to 12.5. Wave 2 at 98.74. Wave 3 at 15.68. Wave 4 at 12.7. Wave 5, 16.75. Possibly, basically what you're saying is this is a wave 3 top here. That's something we've talked about. Sure. Let me zoom out here. You're saying weekly? All right, there we go. And you're talking about right about here, right? Or where are you talking about? So you're saying week 1 starts at 91.75. Where is that at? Right about here. So 1, 2, 3, 4, 5. Possibly. But it's not good enough just to say 1, 2, 3, 4, 5. How does this fit into that? Are you saying that this is 1, 2, and this is 1, 2, 3, 4, 5 to give you a 3, and then a 4 and a 5? Are you talking, how else are you looking at? What is your count prior to that? I think you have to really figure that out for sure there. By the way, some things to notice here. Hey there, Spiral Architect, Block Tech, good to see you guys. Before we get into this, let me see here, what else you guys got here. Candle Shepherd, hey there, Christian. I appreciate you, man. Let's hope for a sideways weekend. It'd be nice, right? Maybe get away from the charts for a little bit, refresh. Arrow Matt, what's going on? He says, how about last 5th wave up now before the macro wave 2 to 9,600? I think that's definitely a good possibility. And here's why. Okay, guys, let me show you some things here. So if we're looking at the weekly, we have this dark. This is that dark area I was talking about. The dark weekly demand. And so this is from back here, the first week of January 2018. So there should be significant resistance in this area here. It's the last weekly cluster of resistance, of supply, prior to the all-time high. So we should expect a lot here. And right now, this comes up there. We're right there, right below it. Let me go ahead and get this on another time frame real quick here. Let's see. And this one as well. There we go. So, as you can see, we're just about to tip into that. Look at the body, look at the candle spread of this candle. It's right here at the EQ of this structure. What is this structure? It is this monthly supply here from January of 2018. That's this larger area. The candle spread on this monthly candle right now is finding resistance right at the EQ of that. So again, where we're stopping makes a lot of sense, right? Right here at this EQ, and then the wick and wicking up, almost hitting that weekly supply structure there. Other things we can look at, we have a descending broadening wedge on the weekly here. We have what may be a throwover here. Usually a throwover is a large candle that pushes through the top of the resistance of the channel or the wedge, and then closes back down below it. And then you see a strong sell-off coming with it. It's almost like a blow-off type thing. And stuff just comes cascading down afterward. So I'm interested in seeing where does this weekly candle close. Do we get this weekly candle closing back below that wedge? Because if we do, I'm thinking we're dropping below the wedge support here, and we're heading down, at least toward this 91, 9200. But again, if we do that, then that's basically suggesting this is 5 up, as I've shown you that count previously. And if this is 5 up, generally for a wave 2, that would be a wave 1. Generally for a wave 2, we're looking at least at 61.8. which is around 8,500. 70.5 gets you right here at this support resistance level. That's 7,400. And even 78 gets you right down here at this support level, 64.45. So if this is one and done up here, you've got this potential drop, from 8,500 down to 6,500. There's good range here potentially. If we look at the wedge, generally we'll go, okay, what's the widest part of the pattern? And so then we do that. Let me get this up a little bit more, just to get us a pattern target. And then we put that on the point of breakdown, wherever that happens to be. Let's say it's right here or so. We'll give it 2 weeks to get down here. Yeah, 2 weeks. I mean, that right there gets you a target right here of 68.77. Now, as I often teach, your pattern targets most times are wave threes. They're third waves. So that gets interesting then. That means this could be wave C, or this could be a 1, 2, 3, 4, 5 of A, B, C coming down here. Or, again, it depends on how you count all this. Again, this is kind of reaching up toward this area. Remember, we've been talking since over here about the possibility of that bearish move down and how this could be an ABC right here, right, for a wave B. And so if it is, if you get, again, 5 down here, instead of an A, B as a triangle, and a C here, if you get a 1, 2, 3, 4 as a triangle, 5 down, so now you got 5 down for A, that means we definitely have an A, B, C working here. And that top would be a zigzag. So you get A, you get a B, and you'll have a C coming down below where A ends. And that's just a regular ABC zigzag that you look for. So again, I know everybody's talking about how this is all bullish and how we're going to the moon tomorrow. But again, that's what usually happens at the tops. The question is, does this pull back from here or reverse from here? And if it does, how far do we pull? Because once you start getting down here, it really starts getting interesting. And you just kind of see the degree of pullback. What's the, what is the volume like? Do we get expansive volume up here at the top as it starts dropping off? Like large volume, does that volume really ramp up as we're dropping off? If we are, be careful. Because that would suggest quite potentially a larger pullback down. None of that guaranteed though. Again, my initial thought, as with most people, is this is an A, this is a B as a triangle, and this is a C. So ABC could be done. That could be done. And this is a 1 and 2, and then 1, 2. So you have a 1, 2, 1, 2. But still, you're looking for a pullback if it's the top here. Now, there's other counts which suggest that this is just a wave 3, and then you got a wave 4, and you'll have a wave 5 up toward 18,000 or something. That gets interesting because remember, I talked about once you're above 18.2, you hit the 90% retracement of this wave down. And now, if this is A, B, C down here, well, all of a sudden, this is A, B, C up here. And now you're looking at a potential flat. So you would get a strong reversal, that's just the B wave. A down and then A, B, C up for a B. Now, if that happens, your first target on that is going to be the 61.8 retracement of this first move. So that would be, if that were to happen, again, we put this up there. This gives you a, let me flip this over here real quick. What you're looking for, a normal flat retracement, a regular flat, you're looking for wave B to retrace 90%, around 90%. So that's right up there around 18,000, 18,200, around that area. So again, ABC down and then ABC up there, and all of a sudden it starts looking like a possible flat. But again, if it is, then all you're going to do first of all is look for a retracement at least to the 61.8. So 94.50. That might be all you get. And so even if that is an A, a B, that could be your C and then up. Okay? Then you would be on wave 1 up. But most of the time, your wave C will end near your wave A, where wave A ended. Not below it, though. Usually around it. So then you're looking at potentially this same area right here. This, potentially 3,400 to 4,400 kind of area, the $1,000 range. But that's not a new low there. But tell me that wouldn't rock the world of traders. Because here they are, especially a lot of them have been holding up here, and it comes down, and some of them held through here, and they're back up, and they're excited and exuberant, and then it drops here, and a lot more got shook out, but there's still, some of them are still holding, and it's going up here, and now they think, oh, we're safe now. We're going to be just fine. And then it drops again to down there. Only the staunchest of holders will be holding at that point. So, you could see that happening. But again, just because I see this doesn't mean I'm bearish. You guys, many, or maybe not y'all, but unfortunately a lot of people on Twitter, are very, how do you explain it? They don't put much, they don't think much further than the nose in front of their face. And so they assume that because I say, listen, this is definitely a possibility, and until we get some confirmation it's not, I'm going to continue to look at it as a strong possibility. Because that's what we do as traders. But they instantly go, oh, you're bearish. You're so bearish. You're such an idiot. You're disbelief. I'm not anything. I'm watching the market. If it goes one way, I'll trade it one way. If it goes the other way, I'll trade it the other way. The same thing with stocks. We're going to talk about new stock market counts today too. But this is the important thing if you're a trader. These are the things you have to understand, guys. The important thing as a trader is to understand what may or may not be happening. Right now, everybody's overly excited right now. They're through the roof. What would hurt that the most is if it comes way back down here again. It doesn't even have to go to 2,400. It just comes way down here. A reversal from this current area would make it more likely that it'll go below 2,400. Like I said, if you're going above that 18,000, you're getting around that 90%, then it just looks like a regular flat and, probably just getting down here around 3,500, 4,500 maybe. But if it reverses from here, all of a sudden you've got this possible 1, 2, 3, 4 is a triangle, 5, A, B, and then 5 down for C. Because as a zigzag correction, that would go down below where wave C goes. So just some thoughts on it. From right here where we're standing right now, you can look at this channel here. And what I like doing, you guys know I love channels because they're very informative. And what's informative about them are their EQs, their equilibrium areas. And so if we do this, not right on that time frame there. Let's see if we do this here. There we go. This would be a pretty decent descending channel here. Look at this EQ. Look how it runs right here as support and resistance. A lot of support right in this area. Notice this target gets you right about that area there. So either you bounce and you go up or you drop below and you come on down to the bottom. The bottom gives you a lower low below your previous low there. That would be the ultimate shakeout. Gets rid of a lot of wasteful money that's in the market right now, i.e. DeFi. So, I mean, looking at this, if we were to reverse off here, this channel becomes very relevant. And for me, larger time frames, larger pictures, wedge, channel EQ, channel support. Larger time frames, that's what I'd be looking at. Right there. If you lose the wedge here, the target gets you right there, which is where you should be looking anyway. Get rejection off the channel resistance, you look for you look for support at the channel EQ. If you lose that, you're generally looking at the channel support. If you bounce off the channel support, your first target is initially the channel EQ. Continue up through that, channel resistance. So yeah, we kind of sit up there. Let me see here. Let me catch up with you guys here. Let's see. Karen says the CME gap at 9,600 still valid. Sure, it's still valid. Sure, yeah. They don't just, go away. They do stay there. And so even if we just had, even if this is just, a 1-2, 1-2, that wave 2 pullback should fill in that gap. Again, your 61.8 is right here at 8,500. That would make sense, right? By the way, when you're looking at wedges, whether they're broadening or just regular wedges, the general rule of thumb is price retraces to the beginning of the wedge. So as you notice here, they get you the 61.8 right here at the beginning of the wedge. So just something else to think about there if we get this reversal off here is potentially a throw over and down. Let me see here. Let's see here. Pigeon Patrol, I agree. Yes. Let me see. Othmane says 2020 big gains and big losses, but I feel that I am more and more in control. Trading will probably take years for you to master. It does. But, and that tends to be, that's the reality check I think new traders need to make. Listen, guys, I'm not scared that by telling you the truth about trading that all of a sudden, people like myself aren't going to have, retail out there to, to make liquid, to provide liquidity. Because people are people. And they've done the same thing 100 years. They're going to continue to do the same thing no matter what we tell you. Some of you will see it and you'll go, okay, yeah, you know what? I'm not good with that. I'm just going to go and pull out. Most traders will stay in the market anyway. So the question is, if you're staying in, does that mean you're going to actually start learning how to trade and what's going on? Or are you going to continue doing the stuff that's resulted in your losses to date? And don't come at me with oh yeah, but I had this great trade where I made $20,000. Yeah? Well, why don't you tell me how much you've lost? Let's be honest. And heaven forbid, again, we go back to what I started with at the beginning. Heaven forbid you're a new trader and you did well right off. Talk to me in about a year. Let me know how you're doing then. Because, and it's not that I'm being rude or smart aleck or anything. It's just, this is the reality, guys. When you've been doing this for a very long time, this is what you learn. If you're lucky enough to be doing it for a long time. But you can't be lucky enough to do it for a long time unless you learn. All right? Let me see here. Omar says, B of 3 on your chart looks like a nice fractal of the current pullback from the top, the previous chart now. So I think you were looking back over here. B of 3. Hey, I'm not sure which time frame you were looking at. I'm sorry. Yeah, I'm not sure where you're looking at there, but I will take your word for it. I'm not as much of a fractal person as other people are because most of the time those fractals are, what they say are fractals, they're really just patterns, and they expect things to happen exactly as they are, and they rarely do. Let me see here. Hey there, Mads. Good to see you, man. Zet, you're going on a hike this weekend? Don't get eaten by bears, man. Don't get eaten by bears. Hey, what's going on, Data? Candle Shepherd says, Chris, on the monthly chart, why are you taking the January upper wick into account for your supply structure rather than the December upper wick? Well, it's 2 here. It's 2 here. Really, this is the way you break it down. You have this right here, and then you have this area up here. And that's really the way I break it down. Really, I'm most interested if we make it up here to this EQ right here. This is all fresh supply up here, 18,500, 18,400, around that area. It hasn't been touched. This is supply as well, though, here. This popped up into here and came right back down. There are potentially traders still holding on from up here that are trapped up here at the moment. You see, we popped up here. We didn't go above. Right now, we're pushing into it. There's some up here where we're holding on, going, God, please let them just come a little bit higher so I can get out. And I'll tell you what, if you don't think that's what they're thinking, you don't know people very well. If you got caught up here, most human beings who get caught up in this area, and they've spent the last couple of years here, they are going to get out. If you finally get up there, they're so scared of going through this again or worse that they're willing just to get out. They just want to get the heck out. And if they can get out without a loss, or with a very little loss, that's what they're going to do. And you're sitting here going, oh, but look, we're so bullish, we're definitely going up. Well, yeah, but you aren't that person holding from up here and had to endure this 2+ years of this right here. Most people emotionally are just destroyed at this point, and the fact that it gets up there, they just want to sell and get out. That doesn't mean they won't come back. A lot of them probably won't. But they just want to sell and get out and go, oh God, thank God it made it back. I didn't lose any money. That's what they're thinking. So, again, the place I'm most interested in is this December wick area up here, the EQ there. But prior to that, this is the area, the last bit of monthly supply prior to that, which is why price is finding resistance right there at the EQ. Right there. Let's see here. Andres Zettler says it's going to be different this time. This time we were going to the moon. That's what they always say, and maybe we do. And I'm not here to say we're not, guys. I'm just here to say, listen, you have to be cognizant of what's going on. That's all. You have to be aware of what's going on. If you're not, that's how you lose money. Okay? Let me see here. Aeromat says it's important to be right, not bullish or bearish. That's best thing right there. That's right. Wait, no. Not to be right. To be profitable. To be profitable. You don't want to be so concerned that you're right that you ignore things that are blindly in your face. So I think that's a part where a lot of traders who've been following me haven't got to yet. They think, oh, he's been so bearish all this time. There's no way he can make money in stocks and all this. He's just been waiting, right? No. We've been trading. Because the bigger picture is always just a possibility until it actually happens. So if you're not willing to trade in the meantime there, you're setting yourself up for just kind of never getting in the market, right? Now, again, when it comes to maybe crypto or something, maybe you're a little bit different on your trading thing depending on your tax situation and all this kind of stuff because of the way in which crypto is taxed and all that. But, again, just because you have a larger term view, whether bullish or bearish, doesn't mean you can't trade both directions on the way there. Again, with your tax situation, keeping your tax situation in mind. Casper says, like the gap between my two front teeth only went away once I got it filled. Let me see here. M4U5H. I'm sorry, I'm probably really screwing it up there. But yeah, you're welcome. Very, very much so. You're welcome. Let's see here. Unknown, what's going on? He says, Bitcoin price will always gravitate around the production cost. After the recent halving, the least to mine one Bitcoin is 7.5. To me, it's nearly impossible to see it going below that level. Again, that's fine to think that way, but, we're not talking about spending some inordinate amount of time down there. A dip below that level. The idea, here's the thing. I think that maybe this is a better way to think of this. As a human being, your psychological state, your emotional state. Oh gosh, there we go. Your emotional state, if in a normal person who doesn't have any chemical imbalance in their brain, this is this you've got this average, right? And so what happens is your emotions go from elated back to normal to depressive to elated, depressive, maybe like this, but it always gravitates around this average, right? And I think that's what you're trying to say. But unfortunately, what you're saying though is that there is that production cost. That would be that average. And what you're thinking is there's no way really that it can go below it. But if it doesn't go below it, then the average constantly rises steeply. It's going to rise, wherever this is here. But that isn't what normally happens. Things don't normally have a base. Or they have a base until they don't anymore. And so most often price does dip below. It does do these things below. And that keeps your average from spiking too high too fast. Because you're going to have people that get over, they get FOMO, and then they got fear down here. They got the fear of missing out here, and then they got the depressiveness down here. People tend to go from extremes. And it's the people that are buying and selling that drive the market price of Bitcoin, not the machines, not the cost. The cost is just a function of everything. It's a part of the price, but it is not the end all be all of price. People are the end all be all of price, because think about it this way. If this is your line, if this is your, let's say this is, you say 7.5, right? So let's say that's right here, and you're saying you can't go beyond it because that's the cheapest to mine, right? What if the U.S. and, the U.S. and Japan and China all of a sudden say, listen, if you're caught, we know who has Bitcoin, and if you're holding any Bitcoin, 7 days from now, we're going to come to your house and throw you in a cage, throw you in jail, prison. Do you really think people are going to hold on to that? There might be a few that are going to try, but people are going to sell. That fear is going to sell, and that'll drive price all the way heck down below that. Now, might it recover at some point in the future? It may, but there's no doubt in my mind price wouldn't soar through that level. Doesn't matter how much it costs to mine it. There's too much fear out there. Human emotion. That's what drives markets, guys. I keep telling you, it's all that emotion. It's that back and forth between fear and greed in the aggregate as a group. That's ultimately what drives price. And so while I, agree that it could, stick around that level or higher more often than not, in no way would I ever believe that would necessarily keep it from going any lower. Yeah, just from that point. Let me see here. Aeromat saying, yeah, my first trade was 40% profit. Unfortunately, that's exactly what burned me. Yeah, it is. Again, guys, a lot of us have gone through that. We get right in. We get a couple of good trades right off, usually because it's a bull market and you just can't get wrong anyway. And all of a sudden, we think we know what we're doing. And we really don't as traders. It's important to be honest with yourself. Are you new or not? And if you are new, then the odds are likely that it was luck. And if it was luck, that means it's hardly reproducible. So we should really pay some attention to learning about it for sure. Hey there, Bianca said, would you happen to have an ETF, an Ethereum chart to make you change your mind about the current count? To what signs does an experienced trader pay attention? Let me check that here in just a bit. We're going to jump on the other markets here real quick, and then we'll take a look at that there before the end here. Yeah, there's definitely possible another count there. I've always got additional counts, guys. If that's one thing you haven't figured out yet, and any good trader should, you should always have invalidation levels and what that means potentially for price action if it doesn't follow through. And in that way, you aren't beholden to one way or the other. You lean one way or another until price, shows you that it's not going to do that. But then you've already got your prepared, you're already prepared for your other way. Let me see here. Zed says the good thing about TWC in the community is that Chris has a genuine interest educating better traders. Yeah, I really do. To me, I'm not here to convince you that, whatever I think is the right way that's going to happen with the market. I'm here to just help you understand these are the proper ways to look at the market. But however you use that in yourself to come up with what you think's going on, that's the important thing. But you can't do that if you don't know how to properly read, what's going on there and what those different things mean. But the market is never just one indicator. It's never just one thing. It's always a multitude, a plethora of other things coming together. And that's why you can have the exact same trading as the guy next to you and still look at the chart, 180 degrees different. Look the other way on the chart. Yeah. No bears in Germany, only bulls and sheep for the crowded trades. Candle Shepherd, you're welcome. Data, is that you? Dare DJ? He says, I would be one of those people who want to get out. Fortunately, I was wise enough to lose all of my 2017 money much faster. That spares me the trouble to think about now whether to get out or not. I like the way you're thinking there, man. Um, Unknown says the average is 9 to 10 to mine. The base is 7.5. And then they're agreeing with me. Of course not, but that is a black swan. I'm not talking about that. Again, I don't necessarily think it's a black swan. Because we're already talking about it. The same way, let me pull up a chart here, guys. Again, it's all in what actually do you know about the markets and, how things are done there. That's what it really comes down to. So for me, again, let's go back up here to the charts. Let's start with the Dow Jones chart here. Let me pull it up here. Discord's running a little slow for me at the moment. Let's see. Come on. Sorry, guys. Give me just a minute here. I think I got too many charts going on here. My browser here is really slowed down all of a sudden. Now we're trying to pull up a new a new tab. My browsers hate me. Just so you know. Come on, pull up here. By the way, guys, Canada's unemployment came out today. They were a bit lower than what was expected. U.S. unemployment NFP report came out today. They were a surprise to the upside. If you're wondering why that's not translating into a strong dollar at the moment, it's because of the election. Locally, near term, it's all about the election right now. Everybody's all, thinking one way or another about it, all concerned about it. That's kind of, driving overall thoughts and actions with the market there. What's going on here? Oh, here we come. Man, oh man. All right. We'll look at this one right here. So, we're looking at the Dow Jones here. Let me zoom out here and talk about what we were just talking about there. We talk about black swan events, right? And everybody's like, oh, COVID was such a black swan, right? Okay. And I'm being kind of facetious there. Because, it's the difference between how do you read the markets or not. So those of you that are with me, that have been following me for any length of time, right here at about May of 2018 right here, I actually put together a chart on YouTube that said this to this. I was off by about $500. I had a $30,000 target here. We topped out about $29,500. We came down here to 18.1. I had about an 18.4 target. Now, I did that in May of 2018. This happened up here February of 2020, almost 2 years later. So I have a hard time accepting that this is a black swan event. This was expected from the way that I was looking at the chart. Again, was all over YouTube about that. So, if we were to say, okay, a drop below 7.5 for Bitcoin would be a black swan event, I don't think so. Because again, when we look at what we're doing here, I've already been talking, a while here about the possibility of this move down, down here to this area. And other possible combinations are along the way. So, the fact that we know it's possible within the rules of the system that we use means that it can't possibly be a black swan event if it happens. Remember, a black swan event is something that basically nobody could figure out that it would happen. Takes everybody by surprise. Nobody could have thought it would have happened. Just out of nowhere, it just surprise. And if you understand that move is possible, then that isn't a surprise. So I don't really see that as a black swan event. Unless you want to not accept the possibility of the movement here. And that's up to you. But, again, if you're doing Elliott Wave, And so when we get up here, again, the same idea when we were back over here. And I had this move already set. Now, this move up back here, quite a bit further up, was further than I thought it would retrace. So that's been a little bit different. But this was all exactly as I penned out back then 2 years prior. Well, I guess this was just, 6 months later or whatever to get this point down to here. 6 to 8 months there. And then almost 2 years up here to get to here. So I mean, I think, that's important to recognize when you're looking at that. Now, where are we at here? Let me see here. Guglielmo, hey, good to see you. He says, do you find more success predicting long-term trades rather than short-term? Yeah. Because long-term, you have less noise. When we're talking about noise as traders, what we're talking about is all this up and down. So the shorter your time frame, the more up and down you have, all these overlaps here, and they create lots of different options. But as you zoom out, you have less and less of them. So your options, you're looking at bigger movements. So your options are not as diverse locally. Yeah, so you should generally have an idea of what's going on, in the larger time frames. And that's why I always tell traders, even if you're trading, God forbid, 15-minute time frames, or even the 1 hour's time frames or whatever, you should always be out to the daily and weekly to understand what the overall trend is doing. At the end of the day, when you're in the markets, guys, the more you understand about the current trend, the larger time frame trend, the more chance you have to be successful on the shorter time frames. But again, the shorter your time frame, the more opportunity for you to get it wrong, and the more you are going to get it wrong. So yeah. You heard many traders say the same thing on Real Vision. Yeah, it's because it's true. It's true. Yeah, definitely. Larger trades are always, larger time frames are always easier than shorter time frames. You've got more range of movement, more freedom for it to move, less possibilities. So yeah. So what does this mean right now? Well, here's the thing, guys. So right now, we've got, I've got this as a 1-2 basically. Some Elliott Wave analysts prefer to look at this as a truncated fifth. You guys know that I'm not a big believer in truncations. I usually think that I prefer to think that if you believe it's a truncation, there's probably a different, more correct count. It doesn't mean that truncations are definitely wrong. It's just that I have never found that to be exceptionally helpful as a trader. The idea of truncation. It allows you to use it as a scapegoat when in your analysis. You don't, because if you go here and you go, well, you know what? That's just a truncated fifth. Then you don't have to think any further. You just go, oh, it didn't go where it was supposed to. It didn't really follow what it's supposed to do, but we'll just say it truncated. I think that causes you a lot more problems than it doesn't. But here's the thing. Remember, the NASDAQ and the S&P both made new all-time highs here, right? The Dow Jones is the only one that didn't, the broad-based index, right? So at this point, we have the counts are not aligned unless you count this as a truncated fifth, okay? Because if you count this as a truncated fifth, then you've got, maybe a 1, 2, 3, or a 1, 2, 1, 2, or, 1, 2, 3, 4, 5, however you want to look at it. You've got basically the same count coming off this top here as you do off the all-time highs on the S&P and the NASDAQ. But it gets really iffy in that area, right? So what if we were to get a new all-time high here with the Dow Jones? Well, you're going to have NASDAQ and S&P likely come up with you as well, which means now all three of them can have a finishing wave up here at a new all-time high, which puts them all back aligned again. So I say that because I've been talking about this a while. I told you, listen, it's never a guarantee what's going on. And it is possible that we still have further upside, right? Recent activity suggests we might. And so as I've been talking with Discord, I've said, well, if we do, then likely this is going to be a fourth wave, and then we'll have a fifth. And of this fourth, we could have it as a 1, 2, and they're working on a 3 here toward 13,429 on the NASDAQ. Or you could have a triangle forming here. And if you have a triangle forming here, you've got an A wave, B wave, C wave. Oh, I'm sorry. A, B, C, D, which means you only have an E wave to go, and then you'll go up. And at that point, you've got a shorter target. At that way, you're looking at, maybe $1,500 or so dollars, or 1,500 or so points above the wave E bottom there. You're looking at, maybe 12,800 or something. But in pulling this up, you get this higher high. So instead of 5 here, we get this purple count, which gives us a 3 and a 4 and a 5. So you do that with the NASDAQ. And right now, the S&P minis here, S&P, is doing the same thing. Same possibility here. Potentially a 1, 2, and then you're working on a 1, or a 1, 2, working on a 3 with a minimum target up here of about 37.85, or you're working on a wave 4 target, wave 4 triangle here, which again is going to give you a shorter target when it's done. So you've got triangle on the E-minis, you've got a possible triangle on the E-minis, a possible triangle on the NDX there. Now, the thing about that is the Dow Jones still's got to be a little bit different. Dow Jones doesn't have a triangle. The Dow here potentially has maybe an ABC here, and then that's wave 4, and then we're going 1, 2, 3, 4, 5 up here. But nonetheless, what you're going to get then is you're going to get yeah, okay, I was just looking at it, trying to see if there's another way to do that triangle. You're going to get an all-time high for the Dow Jones, a new one, just slightly higher up there, which takes with it and gets new all-time highs for those other two. But now your indexes are aligned. And not only your indexes, but I'll show you guys one of our setups here that we're looking at in tier 3 right now. Our hot takes that hot takes that we released today, early this morning. So we got the cubes here, Q, Q, Q. And what do you guess is happening with the Qs right now? Anybody say potentially a triangle? Potentially a triangle. So the Qs would align with the indexes, potentially getting that last move up if we can get a drop down here before it gets above the wave B top there. So it's a setup, potentially sideways for the next month until it breaks out, and then that would be it. And then you end up getting this decline in 2021 where you have everything is in alignment now. Now, we haven't done anything yet that suggests that's what's going to happen, but we've come to this because the proximity of the current highs are close to the invalidation levels on all these. So that makes this possibility that we were looking at a 3, 4, and a 5 much more likely across these that I've just shown you. So we'll have to see how they continue pushing up there. Do we get the pullback we're looking for here? Or do they just continue up from there? But either way, it gets them all up there. And then, that would then make the possibility of that large move down, more likely. But it doesn't mean it has to. But it still keeps the idea alive. A lot of times, new traders, when I talk about what's going on, and if it doesn't happen exactly the way the initial count says, they think, oh, it can't happen now. Oh, no. It's not that it can't happen. It's just we got to look at the count and say, okay, that's not going on there, so that leaves open what possibilities now. But what does that mean? That means, hey, guess what? You can still trade, you can still long stocks and whatnot along the way. Like I said, I talked about 2 this morning. We had, let me see here. We had ACB this morning that popped off. Let me see. Is that the one? Let's see here. Yeah, let's see. It pulls back over here. Yeah, there's the chart. So here was the chart that I gave our tier 3 for hot takes back on, I believe it was the 2nd. So right before this breakout here. Here's my target. We almost hit that perfectly. Almost 195% profit there off that move up. So even though my views are what they were, I'm still posting setups. You can still trade, guys. It's a longer term picture. Longer term picture means there's less possible ideas of what could happen, but there's still going to be different possibilities depending on how it plays out. And so all you do is you continue to trade while it's working itself out. All it does is it makes you aware of that possibility, so you're not the idiot FOMOing at the top. That's the idea. That's what you're doing. Good move there. Recently we had MGen. MGen was another one that we did here. Let's see here. Nope, wrong chart. Let me see. This setup we gave well ahead of time. This setup we gave back on the 8th here. And it didn't break out until toward the end of the month. But again, we gave our members more than enough time to be ready for this and what to watch. I said I was looking for an advance through this red line right here, and the green box was the target. It even went even higher than that. But that green box right there, from this entry right here, 109%. That was in one day. It gapped up in one day. That's this first candle here. So like I was telling you at the beginning of this, the risk management is where you guys make your money. You could have missed 20 trades prior to this, and you would have lost total less than 20% of your portfolio. But look at how much money you would have made on these 2 trades alone. And you would have only gotten 2 out of 22 correct. 2 out of 22. That's like less than 10% correct. And yet you would have been well in profit. Your profit would have been well outsized your losses. Stop thinking that strike rate is all that matters. It doesn't. Now, the better your strike rate, obviously the higher your profitability. But if you've got somebody approaching you talking about, oh, my strike rate, this and that, just understand that they probably don't have much of a risk strategy. They're probably losing a lot more on their trades than they should. If somebody says, oh, my strike rate is 70% or something, most of the time, people that have that kind of strike rate, most of the time that you see online, in crypto Twitter and whatnot, are people that are risking 10, 20, 30% on a trade. Doesn't matter if you're right 6 or 7 times out of 10, because if you lose 2 of those where you're risking 20%, you just lost almost 40% of your portfolio in 2 trades. And when you're correct, how correct are you? Are you making those up? Are you exceptionally better like we're doing with these here? And these are just 2 trades, guys. These are just 2 trades out of the last month. Again, we're putting up over 50 setups a week between what we do with hot takes and what we do with chart requests and stuff like that. So, this is the way you have to think about trading. It's about that risk management, not about the strike rate. Your risk management is always the most important thing. Let me see here. Casper says, personally, I find or feel that block swan events merely highlight or hasten what would have been the eventual outcome. So what would have happened over months or years happens in a shorter time period. Yeah, usually it is what it is. Here's the thing. If it hadn't been COVID, it would have been something else. There would have been some other reason that would have been attributed for price coming down like that. But again, as human beings, we tend to associate news events with price action only when significant things happen. But the other times we ignore it. But if news makes price move, then news should make price move all the time, not just sometimes. Remember, guys, when you're recreating possibilities and probabilities and all these things here, you expect it to happen more often if it's legitimate. You want to see something happening more often. If you look at 100,000 news events over a certain period, and you're saying, oh, these 4 made price move, what about the other 996,000? 999,996? What about all those? I said 100,000, so 99,000. Geez, my math's off this morning. But anyway, I mean, that's the reality of looking at these things, guys. Stop thinking that it's all about the news. What you're going to find is people attribute news just because the news event, right? Hey there, LXT. Good to see you. You know what? While I'm thinking about it, guys, let me do this here. I'm going to check and see if there's something else I want to show you here on my timeline. Let's see here. I just posted a link in there, guys. Let's see if it shows up here in the chat. There it goes. So our friends over at Elliott Wave International, you guys know I don't normally talk about anybody else, but Elliott Wave International, you know, they asked me if I wanted to, you know, to share their information and stuff, and I get a bit of a kickback. Doesn't cost you guys anything, and I don't share it just because I get the kickback. I share it because I've actually gone in there and tried a whole bunch of their services. As a matter of fact, right now I've got a membership to their socioeconomic side. I think it's like $400 or some dollars a year or something like that. But I've tried pretty much everything that they have there, because if I'm going to push something, I want to make sure it's something that, you know, that actually is worth people looking at. But anyway, you can follow that link there. You can get their crypto trading guide. It gives you some good information in there. But as you guys know, if you follow me, I'll generally let you know when they've got free weeks and other free content available on there. And so you can check that out. But right now they do have that. They let me know about that yesterday. So be sure to check it out if you haven't checked, guys. It's excuse me. As being a trader, the important thing is finding information and learning, guys. It really is. So you want to make sure that you're doing that. Let's jump over here to the DXY. Man, oh man, the DXY. So all this election night stuff and then everything else playing out here. And I think we've still got a possible triangle going on. We've got an ABC up here for A. And I think you got to get an A, B, C down here for a B. I think that's where we're at now. Now, this can continue dropping down here. This is the daily demand structure. The EQ is right there around 91.964. I could see this continuing lower down there if it doesn't bounce right here at the S2. But as you can see on the 4-hour, we've got bullish divergence here. And we're finding support on that S2 pivot. That's a confluence of pretty strong factors right there to suggest that we may see a reversal off this. Which means your Forex pairs that are especially directly linked against USD, Euro USD, Aussie USD, you know, USD CAD, all those types of things, they should move in the direction of a bullish USD, probably sooner rather than later here. But again, right now, I think this is probably the best way to look at it right now. It seems like the most likely count so far. The only other possibility of this triangle, especially if we're getting down here below this 90% area or around that 90% area, is the other thing we talked about, which is a flat correction. So ABC, ABC, and then you get 5 up toward this top up here. So that's the only other possibility other than this triangle here. If we're getting on down here a little bit further, down here around 92. At that point, I would look at, okay, maybe we've got this flat correction going, and then you'll have it dropping down. Other than that, I think we're sitting here looking at a triangle. In either case, that means a slightly lower low coming in down here still. And so we'll see where that ends up based on where everything else goes here. But that's still kind of what I'm looking at. And this would make sense if the stock market and everything does its thing, you know, continues up there. This would make sense. This would make sense. So we'll see how it plays out. Where's the link? Block Tech? It's right there on the chat there, right above your text. Let me see here. Y'all can see that link, right? It's the underlined one. Let me make sure. I gotta see if I can see it in there. Let's see. Yeah. So let me know if you can see that, man. You should be able to see. It's right above your comment here. Right up there. Oh, God, go away, you idiot. Sorry, guys, I'm not a very big fan. These people come in here like that. Just got rid of them. Anyway, they come in there trying to, in search of followers? No. I'm fine with my few followers I have. It's a much friendlier, much more closer interaction with that. The other possibility is always that we've got ABC up here for 4, and 4 is done up here. And this is maybe like a 1, 2. And then we're working on 3 here. We'll have a 4 and we'll have a 5. But I'm only really going to be interested in that if we're dropping below this swing low here. As long as we remain above it, I think the triangle or the flat are the two most likely ideas. I think we do. I am leaning toward us having a little bit further down still to go potentially. Let me see here. What else we got? We have, let me get back my other chart over here. Nope, that wasn't the one I wanted. Let's see. Where are you at? There we are. That's what I'm looking for. All right. Oil. What's oil doing? Oil is doing what we expected it to do. So that's good. Again, looking at this potentially as an A, B, and then a C down lower. Right now I was looking at potentially a 1, 2, 3, 4, 5 as a 1 or a C. But I think I'm leaning more toward the blue count, which gives us a 1, 2 of C. So we should be heading much lower here down to probably right around 22 or so down there, I think, if that plays out, maybe something like that. We'll see as this continues to work off from here. But right now, we got the rejection we were looking at. We need a decline below this swing low here at $36.57. If we can get below that, that increases confidence in this count. This top is done here, and we're looking for lower lows, at least to 32.77, at least. But I think we're heading lower than that. So, again, oil is something that we update a couple of times a day for our Tier 2 and Tier 3 members there in Discord. Natural gas, that one's been just a real pain in the thing here. After the December, coming up the December contract rollover here. But, and the November contract rollovers there. But nonetheless, I believe we may have completed our 5 up here. I think we've got a 1, 2, 3, 4, 5 as this diagonal. And so if so, we're looking for a pullback down here toward, I think it would have to fill in. This is the contract rollover right here for November. And that's why I have this large gap up, because this is the continuous contracts chart here. And so, bringing it down to the 61.8 pretty much fills in that gap there. But so I'm, normally at wave 2, you're looking for at least a 61.8 retracement. So for right now, that's what I'm kind of looking. It's possible we could have a 1, 2, 1, 2, 3, 4, 5. But if this is 3 and this is a 4, it can't drop below this swing high up here at $2.789 here. So it's got to kind of stay above. If it drops below that, that invalidates this as a 1, 2 right here. And when we start looking more again as this just being this wedge here as a 1, pull back for a 2. That's what we're kind of looking at with natural gas there. Let's see. Gold. What do you got with gold here? There's gold. So gold's kind of hit our target up here. But I'm not convinced it's done yet. So again, this is that count coming up from the top there. Now, right now, as I've warned, we've got a 1, 2, 3, and that's all we really got. So it is possible we can have an A, B, C here, and we could have one more push up, and that would align with DXY dropping one more, and the stock market picking up one more. But for right now, the count remains valid right here. you know, with what we've got here as far as a 1-2. Now this local count here, this 1-2, 1-2 will be invalidated if price gets above this swing high up here, which is $2,001.20. If we're getting above that, I'm most likely looking at this as a fourth wave here, and we've got one more wave up. And so, again, that's the same thing we've been talking about for a while here. You would need to get one more down here prior to moving above this swing high here, which is, let's see here, 2023.70 cents. You have to actually get a lower low below here, below this 1850 area, before you get a move up there to kind of suggest we have a 1, 2, 3, 4, 5, at least 5 waves down. If you don't get that lower low, we've still only got 3 waves down. And if you move above that, again, this would be A, this would be B, you have C. Or you could potentially look at this as an A, B, C, D, E, which I've discussed previously as a triangle here for B. And you've got C. So we could still have some further upside, potentially. But it hasn't invalidated the local count yet. But again, as I tell you, we've always got additional counts. You should always have something just in case price doesn't do what you think it's going to do at that time. But again, once we do that, like the stocks, like DXY, that's expected to be the final, the final move before it reverses back. So overall, nothing's changed. I mean, I still overall expect gold to head down toward $900, but it just may have one more push up before it does to finish this out. Let's see here. Sounds good, Crypto Girl. Definitely rewatch it. Yes, we did talk about it a little bit. Rancam, what's going on, man? He says, could you quickly cover Ethereum USD since Ethereum Bitcoin is looking bullish? So, let's see here. Let's see. We'll see, maybe. All right, now from yesterday evening's update here for Ethereum, here, we were talking about how it had followed our move up here. Right now, it's a bit higher than where we were looking for it to go. At this point right now, we're above this wave 2 here, which means this is not wave 2 here. If I look at this, let me zoom out here a little bit. Let's see. Yeah, it's possible that you've got a 1, 2, and then a 1, 2. Maybe 3, 4. I'd have to figure out what that count is there. Definitely possible further upside here. Along with everything else, it may be threatening to push out here. Here's the thing. Until, price, this count here, this is a 1 down here, isn't invalidated until price reaches above 489.57. So right now, though, we are pushing up there. We've actually retraced how far at this time? We've retraced. There we go. There we go. Right now we're just under the 78.6. So, I mean, there's nothing going on there that should even make you think, oh my God, it so can't be a wave 2. We're just hitting right where we'd expect it to. Now, again, if we're looking at this as an AB, I mean, if I'm looking at that, I'm thinking this is a 1, 2, this is a 3, 4, and this would be a 5 here. If we're looking at the 4-hour, topped out Stochh RSI, well up here into RSI here as well. Daily's got a little bit further room to go up here on Stochh RSI and RSI, possibly. but again, could get rejected. Daily R2 pivot is right here at 468.97. So to me, that would be a place to watch if we continue up through the top of this structure here, which is right around 450. And then once through that, of course, we'll be looking up here around 484, and then the swing high up there at 490 or so. If we end up getting above that point, the areas of interest for me is this EQ right here on this lower end at 508, and then this EQ up here around 568 to that red line at 572. So if we're moving above that, those are where I'm interested in immediately on that. Let me see here. Yeah. So again, possibly, and in that case, let me see here. I've got a 1, 2, 3, 4, 5 here. If it's going up there, you just have to redo that count a little bit. I'll have to go take a look at it today and see what that potential may be. But even though I don't have an alternate count on here at the moment, what I do have are areas of which I'd be looking for it to target if it is going to go up. And that way, if it does invalidate this count here locally, I've already got targets while I go back and change the count, given an alternate count of some sort. So yeah, that's pretty much what I'm looking for on that. Yeah, so maybe this comes up here. Real iffy at where we're at the moment, but again, definitely could see a potential push up a bit further. But like I said, at the end of the day, we're still below that 78.6 here on the full retracement, so it could still be a very what we'd normally expect as a wave 2 coming off that. Let me see here. I've heard that alts usually take off 1 to 2 weeks after Bitcoin reaches the top and drops way down. Do you agree, or is that just a theory? If the market's bullish, if the overall market is bullish, then generally you can expect that the money flows from Bitcoin when it tops out to the alts. And then as Bitcoin bottoms, it flows back in from the alts back into Bitcoin. If the market's bullish. If the market's bearish, though, I wouldn't follow that at all. As a matter of fact, I would be much more interested in following this right here, because again, this is who's cashing out. This is what they call the whale watch here. And again, they send increasingly to spot exchanges when they're cashing out. And if you're looking for money to flow back into alts, then you should be seeing money flowing more so into the derivatives exchanges, or I'm sorry, the BTA, the Bitcoin exchanges there, and derivatives exchanges and whatnot, rather than to the spot exchanges. Again, the whole idea being that at this point here, it says you've got, in general, your larger players trying to cash out. So they're selling their Bitcoin for cash. So, yeah, I'd be much more interested in what's going on with this particular indicator than what we did before we had this indicator. The way we used to kind of look at it and assume what was going on based on, if Bitcoin was going up or down, and what was going on with alts. But again, it makes sense. If the market itself is truly bullish, then money shouldn't be exiting the market when Bitcoin tops out. It should be heading on over to, the exchanges where it can be traded for alts. But if you're worried that this is the top, if you're concerned about that, and you're not overly bullish on the entire market, well, then at that point, you're trying to cash out rather than just move it to somewhere you can trade it for alts. So yeah, that's what we think about that. But anyway, guys, there you go. That'll do it for today. So just be safe out there. What you're doing. Like I said, employment numbers were where they were. Everybody's kind of sitting on the edge of their seats here, waiting for the the election numbers to finally come out and finish up. Is Trump going to concede if he loses? Is he going to continue battling through the next few months in courts and everything? All that stuff is going to have an impact on the markets locally, short term. Gives it that volatility. When you see people talk about the markets are pricing in a Biden victory or a Trump victory or something like that, don't give a whole lot of thought to that. Because just because the markets may be doing that at the moment doesn't mean that's going to be the way it is, or even that they're going to continue to do that. So just make sure you're trading more shorter time frame on that, not trying to take like a home run position right now. For sure. Let's see here. Yeah, I think that's pretty much all I can give you guys there as far as today goes. So really, I hope you've had a good time. I really appreciate you guys stepping in and joining me for a few hours here this morning. I really enjoy this with you. Don't forget, I'll be back Monday at 10 a.m. or 11 a.m. I always say that. Old time. 11 a.m. Central Standard Time on Monday. We'll be back. We'll talk about Bitcoin and probably a dollar a little bit there. See what happened through the end of today and the opening next week. Yeah, I think so. All right. So, other than that, guys, as always, we'd love to have you. So come on over to, howtotradetowin.com and join us over there. You just scroll on down the page there, or you can hit the join us right up here, and it'll take you to the thing. It'll let you know what you get at each area and whatnot. If you still have questions, feel free to, contact me. There's emails you can do it, or if you're on our server, probably the easiest person to contact is Adam. And he'll be sure to answer any questions you have. You can contact me, and I'll definitely get to you as soon as I can. But oftentimes I have a ton of DMs, and so you might end up way behind in the line. It might take a while to get to you. And then, of course, with all the live streams and the videos and the content, I'm a little bit slower in responding. I try not to be, but it's reality. So there you go, guys. Anyway, I hope you guys, no matter what you're doing, I hope you're trading safe. I hope you're being safe out there. Remember, like I said at the top of the hour, guys, you know what? Be kind. Be kind to yourself. Be kind to everybody else out there. At the end of the day, I don't care if they think something different than you as far as politics go. At the end of the day, we're all just trying to do what we can, right? And some people are having a harder time than others. And so make sure you potentially take that into consideration. How you respond to somebody says a lot more about you than them, no matter what they come at you with, all right? Just remember that. Y'all are great. You take care. Remember, the only thing you control in the market is how much you lose. So risk management is the name of the game, guys. That said, we're going to get out of here, and y'all have a fantastic weekend. Try and take some time away from the charts if you can. If you're in Discord, we'll see y'all over there in a bit. Take care.